We like stats, so check this out. 3 of the worst performing sectors this year are lagging the S&P 500 by the widest margin that we have seen in decades. This is according to Fundstrat. What, if anything, does this tell us? Welcome to Trading Nation. I'm Brian Sullivan. Erin Gibbs with S&P Global. Gina Sanchez with Chantico Global. I mean, listen, overall, it's a pretty big market rally, Erin, but there are some lagging sectors, primarily, as we just showed, energy. Are you concerned about that valuation gap or that move, or is that a big fat opportunity longer term for some of our viewers?
I think for most of these, we're really coming down to more reasonable valuations and reasonable pricing. All 3 of them had big run-ups, particularly in the fourth quarter of last year. Particularly for the financials, I think this is an unwinding of sentiment, as well as the fact that the yield curve is just incredibly flat. Energy, we just have more clarity. We know that oil is just going to stay very stable. So I think that's another reason. There's no reason to have a run up because there's no expectation of oil suddenly increasing. And for your telecoms, I really see that as people getting out of the dividend paying stocks. And you see that with utilities as well. So I think that is just another one that needed to come down in the first place and was overvalued.
Okay, Gina Sanchez, what do you make of that big divergence between some of these sectors, especially the lagging ones?
I completely agree with everything Erin said, and I think if you look at the overall kind of forward expectations, we still have very high forward expectations, but you're looking at some sectors where you had a lot of negative stuff happening over the last year. Energy, you had oil prices way down. They're finally recovering, so theoretically you should see some pickup back in oil stocks, but right now oil has just been in this trading range, and we think it's probably more likely to come down from where it is right now than up. And the financials, that bear flattening that's been happening in the yield curve is a big negative for financials, because remember, financials, banks, they take in money at the short end, and so they pay interest at the short end, and then they lend money at the longer end, and they get to receive interest at the longer end. So you basically need those 2 interest rates to be really steep. You need a big difference, and right now those numbers are actually flattening. The short end is coming up because we're expecting the Fed to raise rates. It's almost baked into the market, 88% probability. And the long end is coming down because economists and bond guys right now are thinking, you know what, everybody's gotten ahead of themselves and we're probably going to disappoint on growth and inflation. And that is bad for banks. So we think that financials are lagging for a reason.
Yeah, going back quickly to you, Erin, because it's interesting about financials. We showed this on my show yesterday on CNBC, which is that there are some of the financials, Discover and Capital One, they're not banks necessarily, I understand that. They're in bear markets. They're down 20% from their highs, and JP Morgan Chase is down 12% from its high, so it's in a correction. Is there opportunity here, or stay away?
For us, the only ones that we really see an opportunity are some of the trading stocks, like your T. Rowe Price. Again, it's this flattening of yield curve and the difference between your lending rates, even insurance, that it gets affected as well, that they're really going to have to find new ways to find their income.
All right, Erin and Gina, thank you very much. Looking at a pretty interesting phenomenon in the market, something the widest in decades, which is always a headline. Guys, thank you both very much. Folks, thank you for tuning into Trading Nation. I'm Brian Sullivan. Until next time, take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.